much better way.
Thank you.
Thank you.
Thank you. Any other commissioners online? Any other questions?
Yes, this is Commissioner Pham. I just wanted to make sure I acknowledged what Commissioner Legal was stating there about something that's going to come up in our subcommittee report later today. That we have some questions that have been generated. I think that the current testifier and the testimony that's been presented is really posing some of the same questions that our subcommittee wants to make sure that this commission is responsible for. So when we get to that part of the report, I think we will see that a lot of what has been testified on this matter are the questions that we want to resolve as a commission.
Ms. Carson, thank you so much for your testimony. Clearly, you have a lot of knowledge and understanding of the subject matter, and thank you for offering to assist us in our efforts. I have a feeling you will be hearing from us with further questions and requests for information.
I'm glad to do so. I'm a retired attorney, and I'm glad to use whatever time and talents I have to help out these major problems.
So with that, it seems like you have a pretty good grip on the jurisdictions that have attempted, that are doing this. Right. And it sounds like there's been some sort of some analysis of how effective it's been. Have there been like significant analyses and available to sort of show the results that you've been talking about that you could share with us?
I can collect some of that information and have it available for you. I'm not sure of any organized collective study of all of them, but certainly jurisdiction by jurisdiction, they're looking at what their results are, and all of them are in the early years of implementing this. So I think like Vancouver, they're seeing what their results are and then learning to tweak the system until they can get the type of result that they want.
And just the very fact that they're raising that rate and that there's the political will there to raise the rate, it sounds like Vancouver sees it as a success, but we'll have to verify that kind of information. Other thing, you mentioned, you said your preference would be for a flat tax. And when you say a flat tax, you mean just 1% pro rata percentage tax, right? Like 3%. So it would go up and down based on the value of the home, correct?
I'm thinking that makes the most sense at this point. Something like a 3%, somewhere in the 3 to 5% range. The reason being that we need the most properties freed up in the affordable range, which is under $1 million. So having something that puts a pretty hefty tax on those properties, if they're not being used for homes, could help free up more of those. And then of course on the higher priced properties, it would bring, those people may be less incentivized by taxation because they're getting so much appreciation, 20% a year or whatever it's been in the past year, but that would result in more governmental revenues that way. So that's why we see perhaps that just doing an easy flat 1%, 3% or something like that might be the easiest way to go.
Now you mentioned, the other thing that I picked up is you mentioned that some jurisdictions are doing fees rather than taxes. Do you have any information on the pros and cons or the ramifications of those choices? Because I know they're different, and I think the city has a different authority when it comes to fees versus taxes. So I was just wondering if you have any information on that you could share with us.
District of Columbia, for example, is the one I'm thinking of right now. I believe that their flat fee is $6,000 for vacant property, and the way they've defined vacant property is pretty much trying to clean up their city of blighted properties. So think more of the type of blighted properties that Honolulu has, or residential properties just in decay, health problems, or long-term not rented for years on end. That's what they're trying to apply it to. And frankly, $6,000 in our market here in Honolulu, it would need to be a hefty, I think very hefty, in order to incentivize the type of changes that we want. And I think that doesn't, I think both the total properties that they're aiming at are too low by just selecting the blighted and vacant ones, truly vacant year round, and that the amount that they're imposing is not high enough to incentivize the type of conduct that they want. So I doubt that they will see in that city, for example, revenues that would even pay for the implementation costs for such a thing. Whereas having something like a 3% across the board or 5% across the board or anything in that range is going to create more funds to be able to perhaps devote a portion of the funds to the enforcement function, because granted, it will take some additional implementation costs, but still there would be money coming in for that. So fees had not been as attractive to me, but I do understand there perhaps could be advantages of a tax versus a fee and how a public reaction is to it. But our thought on, go ahead.
You mentioned startup costs. Any indication of what sort of the program startup costs were for the various programs?
Technology to be able to implement this. For example, on Vancouver's line, I've gotten onto their website to see what it's like to file for their declaration. Everything does occur in like 2 to 5 minutes. You can do the entire thing every year in that manner. And they needed obviously to have portals and secure information and ways to set it up so that the public could interact very easily so that there would be minimal confusion. And then they need an audit function, as would we, on the back end. And presumably we already have one. I don't understand how robust it is for our owner occupant self-declaration, but we would need it for anyone who's self-designated that they were not an empty home. So that would depend on how many enforcers. My feeling in regards to enforcement is that typically some of the very few positions in government that we fund that make their own money and more are our enforcement functions on the audit side. So within the tax department and within the audit function, typically I would think one should expect more revenues coming in than the person has created for their personnel costs, for example. So the main things I see are those two: the infrastructure in the beginning to help make it work, and then the audit and enforcement function, which is personnel to be able to do the auditing.
Thank you so much.
Chairman, can I, this is Jack Legal, I'm sorry. Just a
Absolutely.
clarification, Ms. Carson. You mentioned about decayed and blighted properties. Are you referring to abandoned properties more, or?
Yeah,
or
well,
vacant?
that could be for a variety of reasons. Some are just completely vacant. We lived immediately below a penthouse right downtown that was a luxury, nice penthouse above us that had never been built out for 50 years. Stubbed in, nothing more ever built there. That would be an example of a vacant property. No one can live there because it has no toilets, no kitchen. And there's actually housing around here like that, even in our luxury buildings, because the owner's simply holding it for some future time to sell. It would include the worst of things. A block away from here, or 2 blocks on Pensacola Street, near where I live, and we have a truly blighted property that's already burned twice and endangered all the neighbors and is still there as a blighted property. That would be the other extreme of example that type of tax could apply to. And DC, Washington, DC does use their flat tax for both of those properties and everything in between.
Okay, thank you for the
Chairman,
clarification. Thank you.
Any other questions?
I just had one follow-up on the question that Commissioner Regal asked, which was the concept of tying revenue to affordable housing or housing services. And if while you're doing further research or looking into these jurisdictions, if you wouldn't mind finding out if they tie the revenue towards housing services.
I would be
And
glad
development,
to
that would
give
be
you
great.
some examples of what those are, but my understanding about both Vancouver and Oakland is that these taxes were imposed purely as 100% revenues going to helping address their affordable housing and homelessness needs, and that's why the public supports them.
Okay, great.
Yeah. But I can give you some examples of what they're doing with that.
And I guess the other question then, just as a little follow-up while you're asking or digging into that, is if they are bonding on those. Because I know that like the city of Portland has been using their increased revenues to bond. So then they have, 20 times that amount to spend right now on housing, right? If that makes sense. Not not just using it that year as revenue, but actually pulling out municipal bonds and taking advantage of the very low interest rates that we have right now.
Thank you. I will look for that too. The other thing that's often mentioned as I do volunteer work on the affordable housing side in the city is that because we don't have enough reliable funds from a steady stream each year to address affordable housing needs, that developers who might otherwise be willing to operate and cooperate in developing low-cost housing are very hesitant to do so, because while they try to contract in 1 year or plan in 1 year, by the time they're actually ready to start and have their permit or whatever, sometimes the funds are all gone, already committed for something else, and there is no continuing income stream to help support those developers. And so this is something that, to my knowledge, is also being used in a way that helps provide a steady enough, reliable funding source that developers can be incentivized to build more housing that meets those needs.
Thank you.
Commissioner Mold, may I ask a question?
Please.
You mentioned, how many vacant units did you identify again in the city and county of Honolulu?
The Star Advertiser reported in an article a couple of weeks ago that 40,000 units were vacant. I have been unable to find the source for that yet. They cite the UCLA study. UCLA study says we have the highest, some of the very highest vacancy rates in the nation in regards to our housing. And that seems to be a credible report from many different places. It's just very difficult to get hands around how many of our units out there are not occupied either by the owner or by someone that's at least 3 to 6 months rental for their primary residence.
Yeah, that's very
40,000
interesting.
sounds reasonable to me, but I don't know yet.
It's interesting. If you ever do get your hands on that study, that would be great. I'd like to see how they break down in terms of value, the value of each property and how.
Right, right.
I would,
Thank you,
say
Commissioner
that,
Bean.
I think we could try to look at some census data for that. Because I believe that 40,000 might also include a bunch of short-term rentals. So it is a little tricky to get at vacant that are not Airbnbs or, that category. But I think census data is the best source we have.
And there is a periodic housing report that's done by the state of Hawaii that has figures in it that you can use. And I know that the city might have some work papers on calculating that amount, that number. If there are any other questions? Thank you, Ms. Carson, for your testimony. With that, we will move on to the next testifier. Natalie Iwasa, are you available to make your testimony?
Yes, hi, can you hear me?
We can hear you. Thank you very much.
Super. Thank you, Chair Mold and Commissioners. I did submit written testimony. I'm sorry it was kind of late. I don't know if you've had a chance to read it all, but I wanted to make a few points. First of all, it wasn't real clear from your agenda exactly what you would be talking about, so I just picked some topics that I thought would fit in. And I found this discussion you've been having on the vacant homes interesting, and I just, I guess I would ask that you be careful with this, and while it merits discussion, I think some more research needs to be done. And the reason I say that is because, well, the 2010 data book for Hawaii indicates that only about 3% of the housing units were vacant because they were used for seasonal and recreational use. So I think it's really critical for you to get updated data so that we, any policy that's put into place with respect to this makes sense to do it, because if the numbers are really low, then, it might be a lot of work for not very much in return. With respect to the proposed rates of 3% to 5%, that's really exceptionally high for Honolulu. That's more than double what our current rates are. And I caution you on using such high rates, because what happens is all of the exemptions are due right around September, either 1st or September 30th. So if somebody goes in to purchase a home, let's say October 15th, and it happened to be a vacant home, then they're stuck with that tax for the next year, because they will not have met the deadline for the homeowner's exemption. So if you're talking about a 3% tax on $1 million home, that's $30,000. You know, that's really, really high for a homeowner to swallow. So I just ask that you take a look at that a little closely. In my written testimony, I did ask that you follow through with several recommendations that I think really make sense from a policy standpoint, because the system is not equitable as it is currently. So I ask that you take a look at the charitable exemption, which really is just nonprofit organizations, and it includes unions and business leagues and other types of nonprofits that I think really shouldn't have an exemption. It also includes credit unions, which I don't know if you've gone back and looked at some of the prior reports, you may have seen some of my testimony, but credit unions compete directly with banks. And in fact, they support low-income people about as much as the credit unions do. And credit unions, they were initially set up to support low-income residents. And then the third one I wanted you to take a look at is the for-profit for childcare. That we just shouldn't be doing that. That's just really bad policy, in my opinion. I also wanted you to check with the administration on a couple of things, because I think that there's some information that they can provide to you that will help you make some good decisions. And that is with respect to that charitable purposes, section 810.10 for the 501(c) organizations. If you could have them break out those organizations that are not 501(c)(3), so that we can tell exactly how much it's costing us to support the labor unions and the business leagues and other organizations like that. And then on the residential A properties, there were a lot of exemptions. I think it was $1 billion if I read the chart correctly. And frankly, I can't understand why they even have any exemptions. Maybe I'm missing something, but I ask that you get the details on that, because it doesn't seem right to me. So those are my comments for today. I hope to be able to follow your other meetings as you go along in this process, because I know how challenging it can be. So thank you for allowing me to go past a minute in my testimony.
Chair Mold, this is Jack Legal. I don't have a question as such. I haven't really read your written testimony. I'd just like to know if you represent an organization or you represent yourself as a testifier.
I represent myself.
Okay, thank you. Thanks, Natalie.
Mm-hmm.
Thanks for coming.
Thank you, Ms. Iwasa. Any other questions from commissioners?
Hi, this is Commissioner Pham. I reviewed the testimony from our current testifier, and just speaking as a member of the subcommittee on credits and exemptions, these are things that we will take seriously. We have not met as a subcommittee yet, but similar to what we will see reviewed later today for the subcommittee on rates and classifications, we'll generate an exhaustive list of questions that we want to make sure that the commission looks at, and we will look at this testimony as a starting point to formulate some of those questions. So thank you for your testimony.
Thank you.
Well, thank you very much. We really appreciate your testimony, and we'll hopefully be in touch, and we'll be able to benefit from your experience. It sounds like you have some really good experience. So thank you very much. Seeing no other questions, I'll move on to our next testifier, John Kawamoto.
Mahalo and aloha. My name is John Kawamoto. I'd like to speak on the empty homes tax. Hawaii is in a national and international housing market. Lots of rich non-residents are buying luxury homes for investment purposes. And the housing market in Hawaii is geared toward that market because the housing industry can make the most profits on these luxury homes. The empty homes tax will create a disincentive for them to buy those luxury homes, and as a result, shift Hawaii's housing industry away from the luxury market and toward housing for residents. Thank you for your kind attention.
Thank you, Mr. Kawamoto, for your testimony. Any commissioners with questions? Hearing none, we'll move on to our next testifier. That's it. Okay, so it seems that that finishes our testimony. There being no other testifiers, testimony is now closed. I believe this is time. It may be prudent to bring fellow Commissioner Stormo Gibson up to speed on the status of our subcommittees. At our last meeting, we unanimously agreed to the creation of the following subcommittees: Valuation with Vice Chair Wong and Commissioner Bean, Policy with Commissioner Peters, Classifications and Rates with Commissioners Legal, Peters, and Pham, Credits and Exemptions with Vice Chair Wong and Commissioner Pham. Is there any particular subcommittee that interests you and that you wish to be part of, Commissioner Stormo Gibson?
Yes, definitely the policy committee. And then there were only 2 people on the valuations committee, is that right?
Correct.
Okay, yeah, that's fine. Then I'm happy to join that one.
Okay, so thank you, Commissioner Stormo Gibson. You are on the Policy and the Valuation Subcommittee.
Great.
We appreciate your help. I believe that we have updates from 2 subcommittees that have met since our last commission meeting. Commissioner Pham, on behalf of the Classifications and Rates Subcommittee, would you care to share with us an update?
Yes, thank you, Chair. So the Rates and Classifications Subcommittee met on August 31st. We have submitted a written write-up, not required of commission, just something that we felt was good to get in front of your eyes. So that was circulated to the commissioners prior to this meeting. It outlines very clearly the topics that were discussed, as well as the questions that we believe from the perspective of rates and classifications should be considered by this commission and should be included in our final report that we are required to issue before December 1st of this year. So there are 5 topics that were discussed. They are as follows: the residential A tiering structure, the residential A qualifications, the nomenclature of residential versus residential A classifications, vacant residential properties, and land value taxation. On the topic of residential A tiering structure, we have 5 questions that we would like the commission to answer in its final report. Those questions are as follows. The first is, should a 3rd tier be added to the residential A classification as proposed in the current draft of Bill 20 from 2021? The second question is, should 3rd, 4th, and 5th tiers be added to the residential A classification as proposed in the original draft of Bill 20 from 2021? Third question, should the residential A tier 1 tax rate be applied up to the net taxable value of $1 million, $1.3 million, or some other value? It should be noted that $1.3 million is what is reflected in the current draft of Bill 20. The fourth question, should the residential A tiers be defined with respect to the market median residential property prices instead of set dollar amounts? And the fifth question is, should the residential A tiers be defined with respect to the affordable prices by area median income, or AMI, as defined annually by the Hawaii Housing Finance and Development Corporation, or HHFDC, instead of set dollar amounts? Regarding the matter of residential A tiering structure, we look closely at two bills, Bills 20 and 31 from 2021. And we, as a subcommittee, have a recommendation to amend which provisions are included in Bill 20 versus Bill 31. And that is to make Bill 20 solely about the topic of the tiering structure for residential A, and Bill 31 being completely about the residential A qualifications. So moving on to that second topic of the residential A qualifications, we recommend two questions be answered by this commission in its final report. The first is, should the country P1 and P2 zones be added to the qualification criteria for the residential A classification as proposed in the current draft of Bill 31 from 2021? And the second question, should the threshold of 2 single-family dwelling units be changed to 3 units as proposed in the current draft of Bill 20, which is a provision that we would like to see move to Bill 31, just again, so that Bill 20 would be about the tier structure for residential A, and Bill 31 would be evaluated by the qualifications that put a property into that classification. Please bear with me. I'm now on the third topic of the 5. The third topic is the nomenclature of residential and residential A classifications. It was apparent from our first commission meeting, as well as some of the knowledge of public comments and news articles and responses to news articles, that the public has confusion regarding the terms residential and residential A for classifications. So we recommend that our report includes these 3 questions regarding the nomenclature. The first one is, should the residential and residential A names be changed? The second question is, if the residential and residential A names should be changed, what names would reduce public confusion? And third, should there be more than 2 classifications? Or in other words, are 2 classifications too limiting? The next topic is one that we've heard testimony on today, that is vacant residential properties. We have 4 questions that the subcommittee wishes for the commission to report on. These 4 questions are, should the vacant residential properties be taxed as a new property tax classification as proposed in Bill 76 of 2020? The second question, should vacant residential properties be assessed a separate fee without changing the property's existing classifications, such as residential and residential A, instead of establishing a new property tax classification? So that second question is there an alternative to the bill that is currently in the works? The third question, what characteristics of residential property should classify a property as a vacant residential property? For example, improved versus unimproved, listed for rental, listed for sale, without an occupant for a specific period of time. Based on some testimony today, maybe even blighted, not blighted, those kind of terms that we should talk about amongst ourselves as a commission. And the fourth and final question of this topic is, should revenue generated from a tax or fee on vacant residential properties be earmarked to a particular fund? For example, an affordable housing fund. And the fifth and final topic that we wish for the commission to weigh in on in its report is a model of land value taxation For those who are unfamiliar with land value taxation, that is a method in which the taxes applied to a property are based solely on the land value, not the land value plus improvements, as what we currently have. And the reasons for considering this could include housing affordability and making sure that land property is used for its most efficient and best use, as well as the potential to simplify things on the taxation front. But it's something that we should discuss further as a commission. But the two questions that we have for the commission are as follows. One is, should the city and county officially study the feasibility and effects of modifying the property tax structure to a land value property tax? And two, if we as a commission recommend such a study, what questions does the commission want the study to evaluate? That's all that I have from our report. You can read the full context of the report, but I just want to make sure that I verbally asked all these questions of the commission as part of this oral report. So thank you, Chair.
Thank you, Commissioner Pham. With that, I'll open it up for discussion and or questions of the subcommittee members. Do any commissioners have any questions or comments?
I noticed that Administrator Takara is here. I had several questions I wanted to ask of you because during our subcommittee meeting, a lot of questions came into my mind about how properties are classified. Can I ask you those questions? Okay.
Administrator Takara, are you able to answer some questions?
Yeah, I'm available.
Okay. Okay, great. Thank you.
Hopefully I can answer them accurately. I mean,
No,
all these topics are just flying through a room, so I'll try and answer the best I can.
I think these are pretty easy questions. It's just, I just want to get a clear picture of what the status quo is right now, because as we keep moving along, questions keep coming up in my mind, and a lot of them came up at our subcommittee meeting. So back at the first meeting we had in July, I had asked you, what's the difference between residential and residential A? And I think you gave me kind of an oversimplified answer. You said residential are properties that have the $100,000 home exemption, and basically everything else is not. But after looking at the numbers, I'm pretty sure that's not the case, right?
So we can dive into the details.
If we look at,
I mean, basically residential A, there's a definition of residential A. One of them is being zone residential, be it R5, R7, 5, 10, stuff like that. So if the underlying zone is residential, that's part of Bill 31, where we want to include other underlining zoning. Okay, so if it's residential zone, that's part of the equation. Okay? And the other part is if it has a home exemption or not. So so having a home exemption or not basically is telling the city if that's your principal residence or not. Okay, if it's your principal residence, then that's off the table. Okay, now if it's not, then it's quote unquote, some would call it an investor property. Okay, some people would call it legacy properties and all this other stuff, or a family property.
Yeah.
Okay, but anyway, the owner does not reside on that particular property. Okay. Okay, having that understanding or that perception, if the value is assessed or valued at greater than $1 million or more with those qualifications and have two dwellings or less, then it would be eligible for the residential A classification. Okay, so now having said that, so backing up a little bit, so we had a tax appeal court, maybe Commissioner Wong might be familiar with it, but one of the challenges of that residential A was the definition of, and I believe this is what you started off saying, what is the classification? How do we classify properties? Okay, one of the large criteria is highest and best use. Okay, so one of the highest and best use of residential A, if I recall a tax appeal case somewhat, was that if it's a residential property, then it should be a residential class property. However, there's actually other unless defined. So as you go down through chapter 8 or the classification section, it has the definition of a residential A. So if your property suits those criteria, then you're in residential A.
Based on the numbers we got in our folder, I think there are approximately 260,000 residential units in the residential category. And if you look at the exemptions, I think there's 138,000 home exemptions. So that means there's about 120,000 properties that don't have the home exemption that are classified as residential. And I noticed residential A, there's only about 14,000 properties. So it seems like there's a lot of properties that don't have the exemption, but they are in residential, and not a whole lot of properties in residential A.
So again, the criteria is the $1 million threshold as well as the 2 units on the property. So there are apartment buildings that are maybe in the residential zoning, but they exceed the amount of 2 units. Right. So the idea behind the legislation, if I recall correctly, was that they didn't want to harm or overtax or tax apartment buildings or units or properties with more than 2 units.
Okay, so right now, if you own an apartment building and it has, say, like 10 units, then you're considered residential.
Correct.
Okay, and do they get the home exemption?
If the property owner resides in one of the
In one of the
units.
units, and he gets the exemption and he gets the
Correct.
the 0.35 rate. Okay, I asked a lot of these questions at our meeting last week. So suppose a lot of people start out buying their own home, right? And they get the exemption and they get the residential rate. And a lot of people in Hawaii, I have a lot of friends that do this. They go out and they start buying other properties as investment property and they rent it out. It's a good way to build wealth and whatever, right? Everybody knows that. So if I own a second property or a third property or a fourth property, those also, and I'm renting them out, those also get taxed as residential, not residential A.
If they don't meet the criteria or the definition of residential A. I don't know if I might have missed a statement or 2 in there, right? So if the property does not exceed $1 million or exceeds the number of units or is not on the residential zone, then it would not be eligible for that.
Because he's renting it out, they don't get the home exemption, the $100,000 exemption.
Correct. You don't have to have a home exemption
Okay.
at that point, right?
Okay,
Because it
so-
doesn't meet the other criteria.
Okay, so that would explain a lot of those 120,000 classified as residential. then.
Possibly.
Okay, I think I'm,
Yes.
I appreciate Commissioner Peters' questions, and I'm wondering, is there a way to get the data of those 120,000 homes that are not owner occupied, but don't fall into residential A? I guess it'd be 120 minus 14,000, so about 100,000. How many of those is it because it's under the $1 million threshold? And how many of those is it because maybe it has 2 or 3 units on that piece of land, and or I'm not sure if it's zoned agricultural, if it's a gentleman's farm, then it also wouldn't count as residential A, it seems like, right? So I guess there's 3 categories. Either it's under $1 million, it's the underlying zoning is not residential, but it's being used as a house or property, or it has, I think currently 2 or more units on it. Is there a way to figure out how many are in those buckets?
We don't have that we don't have our data grilled down to that detail.
Is there a way to do that?
Yes, we could, but I mean,
You do have like a database, right? I don't know. I mean, is it possible to?
no, I mean, we usually don't
Just
do,
as an example, if we find out that 90% of these homes, it's because they're under $1 million, that would be a different situation than if we find out that, 50% of the homes are zoned agriculture. Right? Like that would lead us to different conclusions about why something is not in residential A. Or since it's being considered to change that threshold of how many properties, are on there, it'd be good to know what difference that would make, right? If that changes from 3 to 2, I mean, I think the proposed changes from 2 to 3. So like, are we talking about 1,000 homes or are we talking about 10,000?
Yeah, I'm willing to help out the commission, but I don't see where this is going. I mean, you want to look at data, but what is that data going to do, and what initiative is that going to, where is that going to take us? Because right now, as far as Bill 20, Bill 31, I mean, with that data, is that going to change any opinion or views of the current residential aid? Because you want to know what's not residential aid? I guess
I guess
I mean,
it's-
I'm willing to get you the information as far as what we have, but once we start doing queries and digging into the data, then that takes time from production. Right now, we're entering our busy period. So, is it feasible for us to dig deep as, how many are 2 units, how many 3 units? And, right off the bat, we can kind of eliminate all the ones that below the $1 million threshold, right? So now you want to dig deeper into what is the underlying zoning and how many are exceeding the 2 units? Is that?
So why don't we come up with a request, and we'll craft the request, and we'll have a rationale for why we need that, and we can work on that. Why don't we do that in the rates? And where would we do that? We would do that in subcommittee, or we could do it amongst ourselves. So why don't we work? We can work with you to come up with that request, because I could see how it would be useful to have a segmentation of the market to understand what the impact would be of different policy decisions. But we'll make the case. We'll put it together and we'll organize it and we'll make the case. Should we come to that?
Fair enough.
Yeah.
Fair enough.
Can I
Sound good?
continue- Can I continue with my question?
Sure. And then Commissioner Peters with another question.
Okay, so
Thanks.
we're talking about what if I own my home and I have another property or several other properties that I rent, okay? You just told me they don't get the $100,000 home exemption, right? Does the city have some kind of enforcement mechanism in place that prevents someone from taking that exemption on all those properties?
Well, I mean, are you committing fraud at that point?
Okay,
If one of the owners reside on the property, they can apply for home exemption. We're going to grant the home exemption right off the bat. Okay, so if we have a compliance unit, a set of compliance specialists, and if there's fraud committed, it's going to be rolled back and penalties are going to be applied to it.
Yeah, okay, so it's in place right now. I
Yeah,
know-
so I mean, the premise of a home exemption is if you are on title and
Basically,
you reside on the
just
property,
send that, because my place, we just send some paper in, right? And then that's how you get the exemption, right? So I'm just wondering, is something in place that stops somebody from just sending it on every property and taking advantage, that's all.
we have checks and balances. One of the questions is, do you have a home exemption elsewhere?
Oh, okay.
Yeah, so it's self-certification, but it's also you're subject to tax fraud if you lie on your forms, which is a pretty severe penalty. But also you have Administrator Takara, you're saying you also have checks that you can take a look at that.
Yes.
Yeah.
It'd be as simple as, say, the same name pops up more than once and you can see automatically, oh, this guy's cheating right here, or do you actually have to go and investigate, or?
Yes, we investigate.
Yeah,
If the same name is that same person, right?
Yeah.
We do checks if there's,
Okay, that's good.
yeah.
Okay, next one. What about, we've been talking about vacation homes. People come from out of state, from another country or whatever, and they buy a vacation home. Regardless of if they're here for 180 days or less or more, whatever, what classification do they go into right now? If it's a single family home, would it still be in residential?
I believe it'd be classified based on the rules in Section 8 that you were mentioning, Administrator Takara, right? It'd be residential. But then if it checked off if it met the criteria for Res A, it would be Res A.
Maybe I lost when I was trying to take my note. Was the question related to short-term rentals, or did I black out, or what was your question
We've
again?
been talking about housing that out-of-state people come in and buy
Okay.
property in Hawaii. And it could be a condo, it could be a home or whatever. It's probably, if they're using it as their vacation home, it's probably the only property they own on this island, right? So they could probably pretty easily say, that's my home, get a home exemption and get taxed as residential, right? That's what I would think.
They could, but we have partnerships with other counties where we could look at, and again, one of the questions is, do you have a home exemption elsewhere? If you say no, but you live in Louisiana, I mean, we do have checks and balances, we do have partnerships to prevent such fraud. But we're gonna grant off the bat. As soon as we get it, if there's no snags as far as when we check names and stuff and properties, other properties that person may own, we're gonna grant it. But if we do investigations and, for whatever reason, you're subject to penalties and interest and you're basically committing fraud at that point.
So what would be the proper one? Would it be residential A?
No, if you have a home exemption, then that nullifies the residential A qualification. So you'd be placed in residential.
Yeah, all right, but you wouldn't get an exemption.
Right,
But you
but
have that in somewhere else.
yeah, I mean, again, the principal residence, you have 4 indicia of that principal residence, right? So the number of days and voter registration, military duties and whatnot, so.
Okay.
So just to clarify, Chair Moore, this is Jack Legal. Just to follow up the
Thank you,
question,
Legal.
let's say, for example, I think Commissioner Peters' question is, let's say, for example, I own a property in Washington, D.C. Okay, I have my principal residence in D.C. and I bought a property in Waikiki. Can I claim that as a second home and it's going to be under? Although I won't be able to say or to ask for a home exemption, right, on that property. But it's a second home for me. Can it be under residential or residential A? Let's say it's over $1 million, 1.2. Steve.
Oh, I'm sorry, can you repeat the question?
So for example, I own a property in Washington, D.C. as my principal residence. I bought a condo in Kaka'ako for 1.5 million as a second home. Can it be under residential because it's a second home, although it doesn't have a home exemption? Or it can be residential A. It's going to be an
I believe
investment.
that would be,
Wait, so you live in Washington State and then you
That's right.
bought a property in Kaka'ako for 1.5 million.
Yeah.
And I assume we were valuing close to 1.5 or over $1 million, correct?
Yes.
And that you do or do not have a home exemption, or?
Okay, but I claim it as a second home. It doesn't matter, right? I mean,
Yeah.
I tell you it's a second home. So I come here like every other month,
Yeah, I mean, the description that you presented sounds like it would be in the residential classification.
residential A. Because of the value of the property
And the lack of a home exemption.
yes.
and the lack. So the two elements that need to be present. One of the two should be present, right?
Yeah,
No,
so again, sorry if I just interjected, part of the definition is a condominium would assess valuation. So the condominium may or may not have a residential zone, underlining zoning.
So if that apartment is just below 1 million, it doesn't qualify for residential A. Is it gonna be classified as residential? For tax purposes?
If the condo value exceeds $1 million without a
No,
home.
less than 1 million.
If it's less than $1 million, no, then they would not meet that.
It would just be a resident, it would be a residential. And I can
Correct.
claim that as a second home.
Correct.
Okay. Thanks, Steve.
Thank you, Steve.
But just one follow-up on this idea of compliance. Are homeowners exemptions ever checked against state tax records?
We do ask for state income tax.
Okay.
Yeah.
Okay.
And
Is that, thank you, Administrator Takara. Were you going to mention something? Or would you like
I
to comment?
was, and sorry, because the thing is, I was taking notes all this time, and I guess some of the topics that was brought up earlier was I think some alluded to the city's perspective or administration's perspective, and I was going to provide them, but I guess I'll wait. Should I be caught up on a specific question or topic as commissioner?
So you have,
Yes.
city's perspective on a number of the issues that we've just discussed?
Yeah, maybe I shouldn't have said that, but yeah, I do.
Should we, I think we have room for discussion at the end. Can we change the order around if we need to? If you're, I mean, to save time for you, if you want to bring up those issues now, we can have that agenda item right now, the discussion item, and you can give us your perspective if you'd like, or you can come back later, or however you'd like. You're welcome to come back anytime.
If you guys got time, and I think it merits maybe a comments, because it was discussed previously in other bills and initiatives and measures that we addressed previously. So, as far as the empty tax, I think Ms. Iwasa brought up some things. She was a previous commissioner once or twice before, and she brought up some points. But I think the hot topic today, or the relevant topic today, is the empty tax or the vacant tax. Bill 69 from previous, and then Bill 76 with 20, and I think with the testifier. And I don't know if you guys saw the news report where Chair Waters was on KHON, as well as I believe Ms. Carson. And she brought up some excellent points, but I do want to bring light to the commission of what was experienced and discussed in previous budget committee as well as council committees, and maybe you in your former life was a participant as well. But I can try and be as brief as possible. And
Well, let me. So Vice Chair Wong, you were next on our agenda was a subcommittee report. Do you have anything to report on the subcommittee on valuation that you would like to bring to our attention?
It's really a short summary, but I think that, since we're in this deep already on the rates and classifications, it might be well to just stay on topic and go through this. I don't know if anybody else agrees with that, but I feel like we're already pretty knee deep in this issue.
Okay.
I think Chair Mold.
Yes.
I think the one thing in the report that Commissioner Pham kind of left out is basically the subcommittee suggests the commission ask the Department of Budget and Fiscal Services the following questions. And there are three questions that we are asking. First is, how many vacant residential properties existing on Oahu? The second is, does the department, I think Steve alluded to this, that they're so busy and maybe they don't have enough resources. So the question is, does the department have resources to enforce a vacant residential property tax or fee? If not, what resources would the department need? And the third question was, what is the department opinions on the methods for enforcing a tax or fee on vacant residential properties? Those are some of the questions that we came up with, with the Department of Budget and Services, Fiscal Services.
So
And I don't know if
thank
those
you,
are
Commissioner
referring
Legal.
to this question, so.
Yeah. So why don't we allow Administrator Takara to take us through the city's perspective?
Again, this is just to bring light of a different angle that was brought up before, and sorry, I wasn't prepared to do this, so a lot of this is my top of my head and recollection. So real quick, just commenting on the testifier, Ms. Carson. I believe Commissioner Stormo Gibson. Did I say that correctly? Or close enough? Sorry if pardon if again, and that was a question here, which Commissioner Legal brought up about the number of vacant units. And I think we all wondering what that number is equal to the illegal STR or illegal short-term rentals. Just to kind of reiterate the 40,000, and I believe Mr. Peters, Commissioner Peters brought up the number of properties, right? So if we're saying 260, 200,000 units, and if you take away the 140, 150,000 home exemption properties, that leaves about 100 or 120 or so, right, of non-principal resident occupied, right? So the 40,000 would represent probably close to 36% of that. I mean, which to me seems high, but I to be honest, I don't know. We don't know this number. I think maybe Chair Mose, in your previous lives, we had this conversation before, but we don't know. Okay, but I'm just trying to put in references of percentages involved. The big question with Bill 76 and the previous bill was definitions. One of the biggest definitions is, what is the definition of unoccupied, right? So credit to Ms. Carson, she brought up an idea. The definition would be, or more, she aptly posed it as, what is occupied? It's occupied if it's long-term renter, right? So if you certified and whatnot, right? Okay, but now you have other properties owned by families where you're not going to have leases, or you're not going to have leases exceeding the 120, 180 days or stuff like that. So now you're running into that issue. And then again, let's say we have 100,000, 110, 120,000 of these properties that's not owner occupied, and we have a short window to process these, right? So she brought up, Ms. Carson brought up that it's a 2 to 5 second, basically affidavit saying that check, 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 I am vacant or I'm not, but then that puts onus on, I think, the other question Commissioner Legal brought up as far as enforcement and who's going to police these properties. Right now we have 100,000, right, plus units that we're going to have to check. So is the default, as we may have discussed earlier, is the default in the empty tax class, and then you have to prove yourself out of it? Or is it the other way around? You're in residential and not, and then if you check, then you fall into that. So what, how is this going to be implemented? Okay, but what I'm saying is that our office, as the question previously or in the handout that I got, is what resources do we have? We don't, again, we're processing thousands of home exemption, hundreds, if not thousands of dedication and exemptions, such as former Commissioner Iwase brought up, the charitable and low income, all these exemptions coming in. So to do that volume in such a short period, it's going to be rough on us. And just moving on.
I'm curious, because you mentioned that right now you process about 140,000 homeowners exemptions a year, right?
No, I'm sorry. That's how much existing. So homeowners exemption is a one-time deal.
Oh, you don't have to review it every year?
Yeah, but we have new claims in the thousands, right? When people buy properties, they file their home exemption. So it increases each year. But then also, there's a portion that, sell it or they downsize or they move away or whatever. But right now we have about probably 145, 150,000 home exemptions claims in effect.
And are they only monitored the first year that they are entered, or is there ongoing monitoring?
Ongoing monitor,
Okay.
compliance unit, they monitor it as far as we could send, we'll send out investigation letters,
Yeah.
proof of meeting one of the criteria or the indicia, the 270 days or military orders or voter registration, utility bills and so forth.
So how much staff and resources does it take to ongoing monitor that 140,000?
I mean, right, you break it down.
Yeah.
I mean,
I'm just like, is it
but the
10,
thing
is it 20, is
well,
it 30? How many?
we only have 3 compliance specialists.
Okay, so
and the-
3 specialists monitor 140,000 homeowners exemptions.
I guess you could say that, but again, to complicate things, we also have other tax relief programs,
Right.
right? We have low income, we have ag dedications, we have, residence use dedications,
So,
historic resident.
and those three people are doing all of those different things?
Yeah, I do want to hire more compliance
Okay.
specialists. So that was the
Yeah.
other follow-up with, I made a note, and sorry if I'm scattering, but former Commissioner Iwase brought up, she was, I guess, taken aback or wondering why so many residential A properties have an exemption.
Yeah.
And a lot of them are historic dedicated properties.
What does that mean?
So if you register your property as a historic property for preservation with DLNR or the state of Hawaii, that may qualify you as a historic property for preservation in the county of Honolulu.
I see.
So a
Okay.
lot of those properties may not have a home exemption, but they do have other exemptions. And one of the biggest ones is a historic residential property.
So if you could have what you would think would be adequate staffing for all the current work, instead of 3 specialists, what would it be? Like 6?
Sorry, that's a good question, and maybe I'm not prepared for it because I didn't do the numbers. Because we do have multiple other programs.
Yeah.
We do want to be proactive
Yeah.
versus reactive as far as when people complain or whatever, and it's
Mhm.
self-policing. But sorry, I do want more, but how much more? How many more? Sorry, I do not have an answer.
Because I'm just, as a ballpark, if we're monitoring 140,000 units with, let's just say ideally 6 people doing that, then in theory, 6 people could potentially monitor the, these vacant homes or the ones that are not classified. There's 120,000 other units that are not homeowners exemptions. And then within that, somewhere below 40,000 are empty homes, right? So maybe we're talking about hiring like 3 people, and what is that?
Yeah.
Maybe it's a budget of 400,000 a year, 500,000.
How about technology? I mean, could technology assist the department in the division in implementing policies such as
Sure.
this? Yeah.
Always open to ideas and to streamline the process. But just to continue along the lines, so the premise, or one of the arguments or one of the comments that I recall hearing was getting back to the empty tax, right? So when you have a vacant property, or if you have somebody that doesn't live here, then the property sits vacant, then that person is not using city resources, right? So they're paying for resources that they're not using. That's one comment we've heard. And if the aim is to basically deter people to leaving it vacant, then the ultimate outcome is to not have any properties in this classification, right? So you're going to have all this enforcement, all this policing, all this monitoring with the aim to not have any, or to have a very low population in this classification. I'm just throwing and making these comments out. Sorry. There's a lot of, policing, like I mentioned, and what are definitions of occupied, unoccupied? Does somebody have to sleep there or just go in the room 180 days, 90 days? How are you going to police that? I think that's a large consideration that we're looking at, or was looked at. And enforcement. Again, a tax rate, there was a big discussion as far as 1%, 3%. If the premises is vacant, then we just talked about the residential A classification. Does that tax rate need to be equal or higher than the residential A, right? So all these, see how it's interconnected. Okay, so, and I'm sure there's more to it, and I apologize for not being prepared or making my notes scatter all over it. And the other thing is that, I think, I forget who brought it up, where I think it was brought up where the short-term rental properties. So there's, I don't know if you guys were privy to it, but the Planning Commission has a bill from Department of Planning and Permitting. It's called the short-term rental bill. So one of the aims or is that to modernize or further define the short-term rentals. With that being said, as a result, if we get compliance, the illegal or non-conforming or the illegal properties that are being used for short-term, the aim is, could those properties be put back on the market as well? I don't know if that's where you're going, Commissioner.
I mean, but to the extent that a higher tax rate might incentivize that, but with short-term rental properties, probably they're making such a return. I'm not sure if the higher tax rate would incentivize them. I think the empty homes tax is separate from the short-term rental conversation, right?
I'm sorry, let me further explain, I guess, the concept. So to further define a short-term rental,
Yeah.
as far as a TVU or timeshare or even a bed and breakfast, right? So with definition, you're defining these properties that are legal short-term rental units. Okay, so there's I believe Bill 17, I think it's tomorrow's third reading. So now that clamps down on illegal short-term rentals. So now if you have illegal short rentals subject to these higher penalties or enforcement that Bill 17 is describing, then those properties are now caught, so to speak, and are those properties now going to be put back on the market for rental or even sale at that point, contributing to less vacant. I think that maybe that might have been your comment that, are these short-term rentals be put on the market for sale or long-term rentals as far as residents? And I think that was one of the comments that's being brought up that, should this bill proceed and see what happens here with these initiatives and see what happens first before pursuing the empty tax bill. I mean, or it could be just a component. I mean, I'm just trying to tie the two together.
Yeah.
So if you had a guess, how many illegal short-term rentals would be resi? How many would be vacant? What would be your guess?
I mean, I kind of alluded to, I don't even know the number of the vacant empty ones. And then I kind of touched upon, I don't even know the legal and illegal ones, right? I think that's a big question because it's also tied into the TAT, right? So now that the responsibility of the county revenue associated with TAT is now, right, legal, non-illegal, short-term or STRs, right? So excellent question. And sorry if I was being abrupt with the question as far as the details. And I dig it, understand I'm a numbers guy and so as far as for, what is what, and then we can make the decision. And again, yeah, if you can formulate the request, formulate, we'll help out, but just, yeah, thanks.
So why don't we invite Administrator Takara back to talk about specifically talk about the empty homes tax idea that we've had another time. Are there other subject areas that you want to chime in on from the subcommittee, from the Rates and Classification Subcommittee?
I think Commissioner Pham brought up the questions and
we can invite you back to answer those questions.
I can, I guess, chime in with some of our comments or my comments with some of the questions he brought up, which he's asking the commission as a whole to answer and to address, as well as these other questions.
So I don't think we need to answer those today. I think our tasks moving forward are to consider those questions and answer those questions going forward. So we're not on a clock to answer those questions, other than the overall clock of the commission to get a report written sometime.
Yeah.
So no rush on our point if you want to take time and come back.
I can outline more or the comments or discussion topics of the vacant residential as far as the empty tax as well. So it gives me more logic and present a more, I guess, understandable format, and I apologize for not providing that today.
Oh, no, but this was sort of ad hoc, so no apologies necessary. Thank you
I
for,
believe
comments.
Commissioner Bean, the previous meeting, I guess you may have asked, what was the recommendations done by BFS or our property, our division, as far as comments made from the previous commission. One of them is, right, the lack of transparency of valuation process. So the report from last commission, it had bullet points, maybe 8, 10, 12. And I think we already had most of them. And it was already there on the most part. And so we can further, I don't think you guys have the report and I could go bullet by bullet, but as a whole, I think we've already addressed these. And I think over the weekend or last week, I may have expanded upon the answers and responses availability of such requests on our websites. So just wanted to follow up the question from last time.
So answers to our questions are now on your website?
Well, the concerns, okay, right? So one of the questions was explain the two types of valuation methods, right? So in my presentation, the day one, right, was the cost and market. And the other one was, Marsh and Swift, difference between mass and individual appraisals. So I think the difference between mass and individual appraisals is the only one probably we didn't address specifically, but I think on the FAQ section, there is explanation of cost as well as comment of mass appraisal. Again, just bullet points, provide samples, a copy, attributable, comment attributes, property attributes, appeal process, why certain things are not available and stuff like that. One of the comments was it's unavailable. Yeah, to file an appeal online is not available other than during the appeal period of December 15th to January 15th. Stuff like that. But I just wanted the question was, to me, was asked of me, of the status of these recommendations. So I just wanted to come back with that.
Thank you.
May I ask a question? Commissioner Bean. So you're saying that these are now all on the website for the public to access?
Correct.
Okay.
And the thing is that it could be different places, and it could be, one could say it as not user-friendly, meaning that it's hard to categorize or place it in an appropriate location. And I'm open to suggestions. If you guys say, hey, Steve, it's going to be better here than there. Most people understand it. Like the FAQ, it's like question and answers, right? So, but then we have a section of appeals and appeal information. So should it be in the appeal information or should it be in the FAQ? So we're open to suggestions and discussions about feedback as far as what is presented, how it's presented on our websites.
Great.
I
Commissioner
have
Stormo
maybe a-
Gibson.
I have maybe a background question on this residential A, because I know, for example, like in Maui County, if it's your second home, you're paying a higher tax rate, whether it's 900,000 or $1 million or, So I'm just curious, because it seems like the way it's written right now, I could have 3 second homes all worth 900, and I'm going to be paying much less tax than someone who has one home, second home that's, 1.5 million, right? So what was the underlying logic for that threshold and that decision?
Very on point questions. Thank you. My recollection, back in 2010, City of Honolulu created a homeowner, non-homeowner classification, right? So the homeowner would have a home exemption and a non-homeowner would not have one, and each would pay different rates. regardless of the value. Okay, that lasted 1 year.
10?
Yeah,
Is it?
2010.
Okay.
And
uh-huh.
2011, I believe it got repealed, or 2011, it was effective and repealed 2012 or whatever. Anyway, 1 year, similar concept of Maui was set up, and it was, after 1 year, it was repealed because they were saying that, and I believe so, that the same logic here is being applied. I may or may not agree with this comment, but they're saying that the real property taxes is passed to the tenant. Okay, so if you're paying higher taxes based upon homeowner, non-homeowner, so if your property value is at 900,000 or 600,000 and you're subject to a higher taxes, the higher taxes is going to be passed on to the tenant. So now you're harming the tenants, right? That's the logic it was. So, okay, it got repealed, and in 2013, 3 years later, the advent of residential A, where the logic behind residential A was now you're impacting properties at over $1 million. So you're not harming, so to speak, tenants of 2, 3, 400, 800,000, right? So you're harming people who can basically
So the logic.
ability to pay taxes, right? Should the real property taxes be passed to the tenant? Property owners or tenants who are renting such properties may be able to absorb such passover.
I see.
You could make a case that if a property is being rented long-term, that's the goal we want, that's what we want, right? That's the policy goal that we want. Does Maui have an exemption for long-term rented properties? I believe.
Yeah, you guys must have did your homework, right? So they recently passed a legislation that initiated long-term or giving exemptions to owners who rent long-term. And I believe, and that's one of the other points that I forgot and I brought up was that I think Ms. Carson brought up, right, that the long-term be recognized as occupancy. So if you don't long-term, then you're subject to the empty tax. One could interpret that, right? So, I lost my train of thought as far as okay, and I don't know if it was Commissioner Peters brought it up or somebody else brought it where you're trying to rent a property, right? So if I have a $2 million condo and I want to rent it out, I don't know what $2 million condos or in Kaka'ako, say for $3 million, $5 million, as maybe Commissioner Legal brought up. If I'm going to rent it out, I'm not going to rent it out for $1,000 a month just to get out of right? So if I cannot find that tenant that's going to commit long-term, then I'm going to be subject to the empty tax. Is that fair to that property owner? Say I'm trying to find the tenant. I'm trying to pay my bills. But if I cannot locate and find and sign that person in for a long-term rental agreement, am I going to be penalized and subject to a 1 or 3% real property tax? Is that right? So again, I'm not advocating one way. I'm just bringing up certain things that was brought up during the previous discussions. Thank you.
Thank you.
Yes.
What's the definition of long-term rental?
I'm not familiar with it. I just seen it,
Just if I could-
and I want to say 180 days as well. Say 180 days is closely associated with the TET tax, right? So if you rent less than 180 days, you're subject to TET. So that's a magic number right now, right? So 6 months, if you rent more than 6 months or have a term. But I think Maui's one was a year. Again, I asked the administration on that side is how are you going to police that? So even this program, right? If you're saying you have a 180 or a long-term lease, we're going to have to police all these leases.
I'd like to add a little bit of clarification as to the Maui ordinance that went into effect, just because I think that it's been discussed over here. And based on my understanding and my workings with it so far, what the Maui ordinance does, it establishes a default classification for certain properties as short-term rentals unless they can prove that they're being rented out as or used as a long-term occupancy type of property. And that includes being leased out or being occupied by the owners for at least 6 months of the year. If they are not being used, or if you can't produce documentation or proof that it is being rented out for at least 6 months of the year, then it defaults to that short-term rental rate. So regardless of whether or not the property is actually used as a short-term rental, if it falls into these other classifications, then it's automatically taxed at that higher rate. One of the issues, and I think Administrator Takara like alluded to this, was the enforcement. And when you talk about the actual use of the property, it involves people going and, it involves the department and the government officials investigating whether or not, the property is being used correctly. And this is a difficult situation right now, not just for, tax officials, but we also see it with DPP and, investigating the use of different properties. It's different, although it may seem similar. It's, from my perspective, it's different right now from the exemption applications that we file, because right now the exemptions are something you file, you certify them. It is something that you sign off on, and it's not like a default option where where the tax officials have to come and look at it and just kind of monitor it over the years to make sure, oh, is somebody really staying in this property for 6 months? Is somebody really occupying it for what they say they are? I think just from a pragmatic perspective, it's going to take more resources. I think that, entrusting the three people as, bright and capable as they are, it's going to be a lot more of enforcement measures to, to look at the actual use of the property compared to, just what type of property. Is it a house, sort of residential? Then we'll value it sort of residential like. But if you're looking at a vacant property that's a house, then you have to, it's going to take more resources at that mark. So I think just with my experience based on the Maui law, that's what their experience has been too. We've seen, them reach out, look for documentation, substantiation of short-term rentals. And I think everybody's waiting to see with pressed eyes right now to see how they enforce it. And it's only been in effect for the past like 9 months, went into effect right around the new year. So we're all sitting, watching, and learning from Maui right now to see if, what their model is for this, and to see if it can be applied here. I know that's probably going to be longer than what we'd like to see as a commission, because, we have a deadline and a calendar to adhere to. But from Maui's perspective, they're sorting out the issues right now. And I'd love to have their opinion, have somebody from Maui come talk to us about it, and their experiences, especially if we're looking at a vacant property, type of classification. We want to see, especially what a local person or a local government official is dealing with and trying to enforce that measure.
Thank you. So we are, point well taken. That's something I actually want to discuss later. Is we do need to, I want to solicit the commissioners here for people to invite to as subject matter experts. So I want to get you thinking about that. So we're getting close to our 4 o'clock time. Administrator Takara, would you be willing to come back and provide us with more perspective at our next commission meeting?
Yeah, what would maybe help if the agenda items may be a little bit more detailed, and yeah, I know that the testifier I guess brought up, because I don't see empty tax on the agenda, but in preparation, I guess I can try and anticipate where what you guys discuss, and I can maybe prepare, I guess, for the upcoming. But I'm always willing to meet as far as even the subcommittees as well.
Okay, thank you.
May I ask
I'm
a
here to.
specific question for the next time? So I was wondering, I just took a real quick look at the website to try to see if I could find some of the answers to the bullet points on the recommendations of the 2019 report. And I consider myself just Josephine Public, okay? If we're looking to make this process transparent to the general public, I had some difficulty finding most, if not all of the information on here. So I wonder if, when we meet again, if we might have maybe some specific sites for where we could find that information, and then in finding it, look through it and be able to determine, if it really is something that we think that provides the information that the past commission recommended. I know that's a lot, but I mean, if the information is on the site, it's not readily available to me. I can't really find it. So if you could assist us with that, that would be very helpful. Thank you.
Sure.
Thank you. So we will we'll put on the agenda a discussion of empty homes tax with Administrator Takara, and then also a discussion or demonstration of the questions. I mean, if you would, maybe we can do that offline. Maybe set up a meeting.
I think if we could just go into a summary of the subcommittee meeting on valuation.
Yeah.
I think that might be a little bit more insightful and kind of give some clarity to everybody, especially online too.
Oh, okay, about this specific matter. Okay,
I think so. I think because the points that Commissioner Bean was touching on were directly drawn
Great.
from the valuation section.
Let's move on to the subcommittee report on valuation.
Great, appreciate that.
Thank you. Thank you very much.
Fine, I can hang out because I probably may have some comments on.
Okay, yeah, please do. Yeah, absolutely.
Sure, I'll try to keep this short. But just in brief summary, the Valuation Subcommittee met last week, Thursday, on September 1st. Attending were Commissioner Bean, myself, as well as Staff Attorney White. With us, we all discussed what the role of the Valuation Committee would be, subcommittee would be, and what the importance of valuation is going forward. And I think we all agreed that, that there was a substantial amount of input from the last commissioner round in their report on valuation. And we think that after our meeting that these items are still relevant today, primarily for two reasons. I think first for the recent increases. I mean, they've been increasing for some time now, but the unprecedented increases in median home prices, I think valuations are going to be an issue that more people are seeing going forward because of the increases in real property values in Hawaii. So as it pertains to transparency, that's going to be important because people will see higher values in their homes just based on the pure market data. And I think that whether or not they know it now or whether or not they expect it, people are going to see higher valuations for tax purposes. So understanding how those assessments are made is going to be an issue, and we can try to avoid it now all we like, but being transparent remains an issue that I think that the commission, and we all think the commission should be concerned with going forward. The second is that as a result of the past year in 2020, we had a number of shutdowns that affected businesses, and we were quite unsure as to how they affected real property values. But in regards to the commission's recommendation on the use of the income methodology as a means to appeal and determine the fair market value of properties, the income methodology is certainly one of those methods that could account for an event like the COVID pandemic that we're currently experiencing. So a lot of commercial properties, people that rely on income from their property, this might have been their best way to determine the fair market value, especially in a downturn type of year. So I think 2020 showed that the commission's recommendations from its previous report remain important, and that the subcommittee is committed at this point to following up on them, to investigating what's been done since then, which I think Commissioner Bean has touched on briefly, as to just, asking the Real Property Assessment Division about what's been done and what hasn't been done. Because if some of the suggestions are seen as meritless, we'd obviously like to hear that too, and see if there is some type of reason for why it cannot be, it shouldn't be done or can't be done at this point in time too. But we'd like to get, just a check by check brief summary on every single recommendation as pertains to valuation from the previous commission's report, just as a starting point. And from there, we can see, what can be done. Another recommendation that we discussed going forward were to talk with, an assessor at the Real Property Assessment Division to see what type of problems that they're encountering right now, to see, what type of issues and what are their challenges, and as well as to bring in an assessor from maybe the private side or who represents a taxpayer in an appeal or board of review type of case, because I think having those people and their information for the valuation section would be invaluable at this point, because I think while they're both advocating for different sides of the same coin, we're all trying to find a valuation and the better way to transparently value property in Hawaii. And I think that's something that, bring people to the table at a subcommittee meeting would be, immensely helpful to our subcommittee and especially to the commission going forward. Commissioner Bean, did you have any other things that I left out?
Thank you.
Okay. I think with that's done, I think Commissioner Bean's request just for, just for responses, maybe short responses on where these things are found now. And if that's where they are now, we just, would like to know that. And if something's been done to act upon the suggestions of the previous year's commissions, then we would definitely appreciate that, because it would let us know, what has been done, what hasn't been done, and where we should start. We don't want to just spin our gears, trying to retread the same things if we're not going to get anywhere.
May I make a suggestion? Could we, similar to how we asked Commissioner Stormer Gibson to formulate her request for data, could you guys formulate a specific request and share that with us, and share that with Steve Ficara, so we can, document that and make sure we're getting all the questions, asked and answered to the best of, their ability.
Certainly. Staff Attorney White was present at the meeting. He took down the minutes for what we discussed. They're not ready just yet, but once we
No.
have them, I think that, we'll be in a good place to submit an official or formal request for responses to our inquiries.
Great.
Fair enough. Yeah, sounds good.
Thank you for your report. Any questions from commissioners about the Valuation Subcommittee report? Or committee?
I'm not as familiar with hotel and commercial properties, but I get the concept of like, hey, we had a lot less income this year, so our property is not worth what it would be in a normal year, right? I'm just curious, previous to COVID, do we know, like, on average, how many commercial or hotel properties would use or appeal with an income valuation method?
I couldn't tell you. I mean, from the get-go, the Real Property Assessment Division uses the market and cost methodologies, not the income methodologies right now, because those are what are written in the ordinances. That's what's applied at this point. If an income methodology approach is ever used, it's brought by the taxpayer, and I don't know of any entity that keeps track of the data of who brings an income methodology. A lot of times, if somebody brings an appraisal, the appraisal is comprised of not only the income methodology, but also cost and market approaches too. So it's sort of a composite report. So it's tough to say, if somebody's relying entirely on an income type of report or appraisal, because a lot of times they'll bring in different types of valuations from different perspectives and as many, ways they can as to support their case.
Just one comment. So yeah, the income approach has brought up in various ways, as far as in bill form, as far as implementing the income approach as well, or applying the income approach in the valuation process. And just a comment as well is that during the COVID or income streams may have been adversely affected. But I guess we're looking at actual sales. Did those properties sell? Or are they just withstanding this difficult time, right? So, income streams obviously going to impact the valuation, but did the valuation actually materialize in actual sales?
Thank you. Thank you for your point, Administrator Takara. Okay. if there are no further questions, is there any further discussion that we'd like to have about the subject matter areas going forward for general discussion? I think we've been having that. I think we've melded that type of discussion into this discussion. So Commissioner Aide White is in the midst of drafting a document related to the recommendations made by prior real property tax advisory commissions in 2019 and 2017, and any action or efforts made related to or resulting from those recommendations. Once that document has been reviewed and approved for formal transmission by the Office of Council Services, it will be distributed to you as a formal communication. I imagine some of our questions will be addressed in this. As such, I am deferring this discussion item to our next meeting. Okay, moving on. Members, are there any announcements?
I have more question, Chair Mold, for Administrator Takara. If he mentioned about the agenda, not very specific, did he get a copy of our report for the our report evaluation? I mean the rates and
We just provided that to him today, so he's been reviewing it on the fly. So I think it'll be good for him to take it back and have more time to review it before we ask more questions on it.
Great, thank you.
I have a statement about that. This is Commissioner Pham.
Oh, hi, Commissioner Pham. Sorry, gosh, yeah, sorry if I didn't notice that. Please speak.
Yeah, stories. So regarding what we wrote into the report, the questions that we generated as a subcommittee were questions that we suggest the commission ask the department, not questions that we are already asking. So it's a lot of questions, and I want to make sure that we are respectful of the administrator's time and resources. So I'm actually not in favor of the administrator taking all those questions as we've written them, because it is a lot, and I would rather have the commission make a decision together that these are in fact questions that we want asked and answered.
I concur with Commissioner Pham. I think that, the list, we just received it today. I'd like some time to look over the list of questions, and if we could, I think we could narrow it down at our next committee meeting, our commission meeting, and hopefully make Administrator Takara's job a little bit easier.
Sounds good. Yeah, so I get that. So these are questions that the commission is going to formally adopt as our questions, and so we should discuss them first. So I agree with that. So no need to come back with answers.
Cool, thank you.
But you can see kind of where our discussion will be going, and that will hopefully be enlightening for you. Okay. Any other questions online or in the room or announcements? All right, seeing none and noting that we have 3 minutes left of our time, let's move on to scheduling our next meeting. Subcommittees are welcome to meet as they please, as you guys know. The only thing that I request is that each subcommittee provide a brief summary, which you've done so far, and report any of any meeting that takes place at the next full commission meeting. With that said, I'd like to open the floor to hold on. With that said, I'd like to open the floor to discussion about the next meeting of the commission. So how about 3 weeks from today? Same time?
3 weeks from
28th?
today,
I'm available.
28th of September.
Commissioner Pham and Legal?
28th of September works for me.
It doesn't work for me. I'm sorry. Yeah.
28th doesn't work?
Thursday work for me, I think. No, not even.
So Thursday the 30th?
No, I'm sorry. It's not gonna work. 27.
How about
won't work.
Wednesday the 29th?
No, 27 for me would work, which is a Monday, actually. It's the same time.
That works. Monday, the 27th works for me. How does that work
Yeah.
for the other commissioners? I'm getting
Monday,
agreement in the
27th.
room here. Commissioner Pham?
I'm in agreement.
Okay. So 2 p.m. to 4 p.m. Monday, September 27th will be our next commission meeting.
Okay.
Absent any
awesome.
objections, and I see none. Great. Commissioners, there being no further business today, is there a motion to adjourn?
I move to adjourn.
Second.
There being no objections, this meeting is adjourned.
Thank you.